point. It's holding. Let's see if the cloud, come on. Where is it? There we go. Nice technical breakout. We're taking out these recent highs. Nice momentum switch. I want to see if Bitcoin can follow through and take out 79,000. I'd be uniquely excited about that. So Bitcoin, I admit it, it is looking pretty good in the short to medium term. There's Oklo, unfortunately, taking a hit. Bitcoin's popping a little bit. Where's oil? Here's oil. Oil turning a little bit back around. There was a downside gap fill on SPY, but we got it in the very, very first minute. You could see it here even on SPX. There was a downside gap fill to yesterday's high at 6729, but we got that literally minute one. And now we're making our way for the upside gap fill. What is that value? 6745. 6745 is the upside gap fill on SPX. And we are making some pretty swift and decisive moves to it. It's about 5 to 6 points above where we are right now. So we got a quick little downside gap fill. We got a quick little upside gap fill. We are cleaning up the charts today. So we haven't quite gotten the upside gap fill. Once again, it is 6745, but we are getting very, very close. So it is it's roughly where my cursor is. So if you've been playing that for a while, obviously congrats to you. It didn't hit it as quickly as many people thought it would. It's taking its sweet time. You know, it took a little bit, but hey, better late than never, I suppose. Better late than never. So let me set up an alert there just so we know when it officially hits. So we're going to hear a little bit of a ding, a little bit of a feedback. So if you're playing that gap, obviously it didn't happen day 1, 2, or 3, but it does look like day 4 is the day for you guys. Let me very quickly get up the options flow on the day. We'll look at the S&P 500 and the Mag 7 and in all reality, honestly, whatever you guys want to look at. Out of the gate, and remember, it's only 3 minutes worth of data, but we are popping on the Mag 7 and same thing on the S&P 500. So once again, only 3 minutes worth of data, but thus far the bulls are showing a little bit of enthusiasm out of the gate with respect to momentum. Excuse me. 5 minute is bullish, 10 minute is bullish, 30 minute is bullish, and the 4 hour is also bullish. Looking at the Nasdaq, 5 minute is bullish, 10 minute is bullish, 30 minute is bullish, 4 hour is bullish. So momentum is bullish. Options flow is neutral, leaning bullish, depending on what you're looking at. And then I would say overall structure, the daily structure is bearish. We do have lower highs and lower lows, but depending on the time frame, maybe you're looking at the 30 minute and you're thinking, okay, I see some fresh highs, I see some fresh lows. We did just get the upside gap fill, so a round of applause to everyone playing that. Congrats to you. Obviously, we could keep going. I'm not saying we're going to get reverted here, but I'm just saying if that was your specific play for the upside gap fill, congrats. You made some good money. And if you choose to hold it, hey, I'm rooting for you. I hope it keeps going. Hang on. Let me make sure we are good here. I just want to make sure we have everything up that I need up. Don't be surprised if there's a little bit of profit taking. We are seeing some positive gamma, especially at 6,770. Speaking of which, here are my key levels on the day. I know a lot of you guys like them. If you like them, use them. If you don't, hey, I'm not going to be offended if you choose to not use them. As I always do, I mark out the previous high, low, and close. That is this green horizontal line, this red horizontal line, and this white horizontal line. The white box is the transition zone. From the perspective of market makers, it's considered to be bullish above, bearish below, and choppy within. And then the final thing are these yellow horizontal lines, which is basically all the big money positioning. You can see we have some positive gamma at 6,750, the most positive gamma at 6,770, a little bit at 6,785, and then from there we have some serious positive gamma above 6,800, kind of a noteworthy amount at 6,850. Obviously, we could talk about that a little bit later if we get close there, but in the meantime, let's see if we can get through this node at 6770. I highly recommend you mark that out on your watch list today, your trading view today. We're looking at this upside gap fill. There's a little bit at 50, which we almost just got to, and then once again, the biggest positive gamma node, which can kind of act as like a gravitational force if you get too close to it, so we could get a little bit of sticky price action right there. Once again, is 6770. So in terms of near proximity to current price, 6770 is something that you're probably going to want to be paying attention to if you're looking at the overall market. So we did get the downside gap fill and the upside gap fill on the S&P 500 today. Did we get the upside gap fill on NDX? Let me see. No, there is still distance to go on the NASDAQ. 24,856. Once again, that is NDX, not NQ, and not QQQ. Let's see what those levels are. We almost hit it. Let me set an alert right there. Once again, the upside gap fill on QQQ is 605.03. And since we're here talking about it, folks, this is your friendly neighborhood reminder. Roll your options contracts. We were on the March contract, the H contract, the third month of the year. It might say -3. It is time to upgrade from the H contract to the M, as in Milo, as in Matt, as in maraschino cherry, whatever you want to do, get on the M contract, obviously number 6. So update your futures contracts. This is for all the futures trader. If you're trading options, if you're trading stocks, this doesn't apply to you. If you're trading crypto or bonds, this doesn't apply to you. If you are trading futures, today is the day to roll. We are in the week of quadruple witching. You have to definitively roll it by Friday, but today is the real day to do it. So if you're looking at the levels and you're like, why are Matt's levels different from my levels, especially when we're looking at futures such as ES and NQ, it's probably because I rolled and maybe you haven't quite yet. So once again, this is your public service announcement. This is your FYI. This is your alarm. Whatever you need, today is the day to roll. So if you want your levels to show the same as my levels on NQ, on ES, once again for futures, roll it to the M contract, Milo, M, or -6, depending on how you have yours set up. Why the different letters on the contracts? Because that's how the futures world works. That's when you have to take delivery of that particular contract. It's basically just, I know most people now trading futures, hang on, it has to do, like, I know a lot of us are active traders. I know a lot of us are active traders.
Order submitted. Order filled.
But remember, the original use case of trading futures has to do with it was just a whole different derivative market where people are going to actively be using it to hedge out whatever their business is. So, for example, if you are, I don't know, a farmer, and if the price of live cattle diving were going to really, really hurt you because you own so much live cattle, as a protection, as a hedge against your business, you would probably go short live cattle contracts. Or another thing, you could go long it and it guarantees the price that you could sell live cattle at, something like that. But it's a derivative market that people were using to hedge out their business. And obviously, you need a certain end to those contracts of be like, okay, I think oil will be at this price at whatever date, and I need that delivery. That's why it's called a futures market, because you're taking delivery in the future. You're getting a hedge now to protect yourself in the future. So that's what all the different months are for. And that's also why different futures markets have different expirations. Certain things like oil and gold roll every month. Certain things like the S&P 500 and the NASDAQ roll every quarter. Not all futures contracts roll at the same time, but this is a particular week where they do all roll. It doesn't necessarily have to align like this, obviously, this time around, and this happens 4 times a year. That's why we call it quadruple witching, is because there's 4 types of contracts, 2 types of futures, 2 types of options that are all expiring this Friday. And if you do a study on it, and I do have a video up on it, so feel free to watch it if you're interested. I do have a video up on it, and hang on, let me just check out one thing really quickly here. Let me check out one thing really quickly with my position. Good.
Order submitted.
Okay. Quadruple witching. You have 4 types of contracts, 2 types of futures, 2 types of equities. They are all expiring this Friday. And if you look at quadruple witching just from a larger standpoint, it's not necessarily associated with bullishness or bearishness. It's just associated with higher ranges, higher volatility, because there's such a movement of money. So if you go into bull witching, don't make like the misstep of assuming it has to be bullish or bearish. Historically, there's no skew favoring the bulls or the bears, but it does really, you see a large uptick in volume. So you also see commonly an uptick in volatility. So once again, that is specifically this Friday. Things are still going to be probably pretty crazy tomorrow, Wednesday, because oil's taking a bit of a hit right there. You're going to have a hit or a craziness in the volatility market, specifically VIX, because VIX contracts expire tomorrow, Wednesday, and that happens to align with an FOMC meeting. The FOMC meeting where they decide the Fed fund rate, it technically starts today. It concludes tomorrow. We find out their decision at 2 p.m. Eastern, and then Jerome Powell, the chairman of the Fed, will be speaking at 2:30. So I want to put that on everyone's radar. Right now, there's a 99% chance of no change to the Fed fund rate at all. So really what's going to be moving the market is the market's interpretation of what Powell has to say at that 2:30 press conference. So once again, 2 p.m. Eastern tomorrow, Wednesday, Fed rate decision, or 2:30 is when Powell speaks. A half hour before that, 2 p.m. Eastern, is when we are going to be hearing the results from basically all the voting members on the FOMC board. Can you explain to me scaling rule is on Apex? Explain it like I'm mentally challenged. Yeah, it's just how many contracts can you trade? The more profit you have in your account, the more contracts you could trade. So more profit, you can scale your contracts higher. So at a certain point, you can trade an X amount of contracts is your max size. That size increases, X increases as you have more profit. Is mom going to let you throw a party in the basement when you get $1 million? Dude, I hope so. Dude, if she doesn't take me to Texas Roadhouse, we're going to have problems. Mag 7 not really moving much today. The Nasdaq went up, dropped, popped, going flat. So no real movement in the Nasdaq or the Mag 7. The SPY had a nice pump. Flow alert kind of represented that top. Anecdotally, we've been seeing reversals off the flow alerts, but it is basing nicely. So I'm hoping that we can, basically we're basing just below 67.50. And I know this is going to be a bit of a struggle, but I'm looking for that pop to 6765. Actually, I don't even like that anymore. I'm going to update this 85 and 70. So these are new trades as of market open. What did I say? 70? What was that? Right? 70 and then 85. All right. So we're updating these just because the gamma map has shifted since market open. All right, so quick little shift here, Okay, so clearly, if we break above 6750, which I mean, I make no guarantee that we will, but if we do, obviously the next target on SPX would be 6770. And why is that? Because it's a gigantic positive gamma node. You have a lot of positioning there on the 0 DTE basis. There's 3.3 thousand sold SPX contracts there, specifically calls. So it is creating a ceiling on the day. That is positive gamma, sold contracts from the, I guess, perspective of, well, the market makers bought them because retail sold them, or traders sold them. I shouldn't say retail. Retail's probably not trading that size. But anyway, there we are. I'm looking at this. I do have a long position. I wanted to get in before the potential break of 6750. Obviously, being a little bit early to the party might end up not doing so well for me. I just wanted to have that fill before, just in case we get one of these situations where we get the breakout. I wanted to have my fill below this value because on the retest, it might act as support, which is exactly why I decided to front run it a little bit today. So if you're curious why I traded early, it's just because I specifically wanted to fill below 6750 because on the breakout, there might be a retest. I don't want my retest to get knocked out for break even. I want to try to be able to ride it up to this gigantic positive gamma node. So to me, the risk reward of that, it was worth it because you could see, can you guys see this? Yeah, let me move myself over here. I wanted to be in a bit earlier. I wanted to be in below 25,100. I wanted to be in below SPX testing this, just because if I'm lucky, if I'm on the right side of variance and I get that breakout, if there's a retest, I might then be protected by that level, and my stop at break even might never get tested. So that was kind of the logic below. This is what I'm looking for: a breakout, a retest,
Order
support.
filled.
And I just locked in my Lucid accounts at $571. I had the same entry on all of them, just to explain it right here. You could see I got in at 938 on all of these. The lead account is this take right here, 938. I just decided to lock those in. You could see Lucid. I got in just below 100 because on those, I've already maxed out the buffer for when I go to live. I just need to continually get those $250 days so I could get another payout. Speaking of which, hang on, let me switch back to this just so you can see what's going on. Let me also make sure I have no pending orders. Cancel all orders, positions. All right, so I already locked in 500, 500, 500, 500. I've already locked in 2.5K on Lucid. I'm not trading my FFN accounts because I'm waiting for a $10,000 payout. And then obviously I'm trading on Legends. I am trading on Tradeify. I'm trading on my FFX X ones, and I'm trading on TPT. 73. This is not actually my profit target. I just want to put it in so I can move it around. And I guess if it hits, that's sick because that's a 100-point trade.
Order submitted.
So I just want to put that up there because I don't need to be overly greedy. I just wanted to mark out where 100 points is. But after we retest 100 here, I'll probably put my stop in at break even. But I'm just looking for one solid. Like I said, this is, I literally drew before this happened exactly what I'm looking for. Now, will it happen? Dude, I don't know. Maybe I have a little bit of luck of the Irish today. Maybe I don't. I don't know. Your guess is as good as mine. But remember, when it comes to trading, it always comes down just to your risk management. The best traders are the best risk managers. They're not necessarily making money on every single trade. It's just, can you have risk management? I make money about half the time. If you're new to the show, this is important. If you are a returning viewer to the show, let me just drive this point home. I'm right about half the time. Every other trade I do, half make money. Every other one loses me money. At the start of a trade, when I put a trade on, I don't know which part of the 50% I'm in. So you always have to trade it defensively as if you're in the 50 losing percent because you don't want to blow out. But then obviously you want to give it enough room to potentially work for you that if you're in the winning 50%, you might be able to catch what the actual trend is. Obviously, there's always a couple things at play. For example, I always want to know where the positive and negative gamma is. I want to know what's going on with flow. I want to check the NASDAQ. I want to check the Mag 7. I want to check what's going on in the S&P 500. I want to know previous levels. I want to know gap fills. The more information, the merrier. And if you ask me, the more that aligns in one direction, you are looking pretty freaking good. So for me, I'm happy right now. I hope this is my one trade of the day. If anything, I love the days where I can catch the initial impulse. My trading methodology, yes, I have things such as Icarus, which is a data mine thing of just like right now, who has the edge, the Bulls or the Bears, just from short-term data. But my overall mental framework of day trading futures, this is specific to futures. If you're a futures trader, if you're a prop trading person, obviously day trading futures, specific to that world, I operate in what I refer to as the MK impulse. I've done a lot of data mining that suggests most days, not all, there's no such thing as an all-encompassing statement in the world of trading, but most days there is an initial impulse at some point within the first hour of trading, between 9:30 and 10:30. If you don't believe me, go look at the charts. Do a little bit of your own anecdotal research. If you really want to test that statement, go download the data and talk to AI about it. But to me, not only backed by data, but backed by like anecdotally what I see in the market, so backed by empirical evidence and also just recent trading, I believe that there is a large impulse, maybe up, maybe down, most trading days at some point within the first hour, between 9:30 and 10:30. My goal as a futures trader is to catch that impulse that I refer to as the MK impulse. I want to get the meat of the move of that first impulse. I want to get in, I want to get most of that move, and I want to move on with my life. I'm not saying that's the only way to trade. I'm just saying that's like a particular framework that I've been working on for a while in the world of futures trading. And obviously, I want to keep like adapting it and improving it, this, that, the other thing. But just to, I guess, shine a little bit of light on specifically how I see the world of day trading futures. Obviously, if you ask me my framework of trading options, it's completely different. Swing trading, any of those things is very different than how I day trade futures, which is very different than how I invest in long-term stocks. But like very specific to the conversation of how do I day trade futures? I believe the evidence strongly suggests at some point in the first hour of the day, there's commonly a large move. I, as a trader, want to get the meat of that move. I'm not trying to bottom tick and top tick. I want the large percentage, as big of a percentage as I can possibly get of that first move. I want to lock it in, and I want to move on with my life. If I get it, awesome. If I get knocked out at break even, hey, that's going to be part of the game. I just don't want to get in a situation where I'm playing it in the wrong direction and the impulse is against me. That is like specifically what I am trying to defend myself against, is being on the wrong side of whatever that potential trend is, and then just getting my ass handed to me and then not getting out. It's one thing if like you're on the right side of it and it just doesn't work because of your risk management, but to be in a particular trade and you're on the wrong side, well, that's where you can
Order
very much
submitted.
get into issues. Speaking of risk management, I put my stop at break even. It's a free trade. So if it knocks me out, that happens about a third of the time, roughly, to give you guys the percentages of my own trading. But it's just protection. I just don't want to go red. It's honestly that basic. So if it dips, yeah, does it suck? Yeah, it sucks. Because like I said, I wanted 100 to protect me. Maybe it doesn't protect me. Like, okay, in my mind, that would have been the perfect trade. I'm in below, it pops up above, we retest it right here at 948, and then we rip anyway. Is there a chance that maybe I get protected at 80? Yeah, maybe. But also there's a chance that maybe it comes all the way down and vomits and then I'm deeply in the red. I would rather be out for break even. Speaking of which, I'm going to go slightly green on this one just to cover commissions and whatnot. I want to take a shot. And when it comes to the world of day trading, I believe it has to do, to be successful, I think it has a lot to do with this concept. You know, for now, let's just delete this so it resizes properly.
Order canceled.
I think it has to do with how long can you survive the marathon of trading. You need more trades and more time in the game to potentially have those big returns. So you are inherently increasing the length that you can play this game every single time you put your stop at break even, because it means that at least on that one individual data point, you're not getting knocked out. So if this gets knocked out, and I want to be honest, it's very close to getting knocked out. It most likely will get knocked out. Does that feel good? No, it doesn't feel good. But think about the math of the situation. If you are continually protecting yourself by every single time it goes a little bit in your favor, if you're getting your stop to break even, inherently, it can never be that bad. Maybe it's not that good. Maybe you don't have a monster return, but at least you didn't take an L. And that's like the difference between doing what you know mathematically is right versus like what emotionally feels good. Like no one wants to take a loss. No one wants to go, almost 50 points in their favor just to get knocked out at break even. Yeah, it sucks, dude. It sucks. I will be the first to tell you that it sucks. But yet, this is how I survive the game. When I'm blowing out a bunch of prop accounts, it's when I'm doing dumb shit, as in the opposite of this, of instead of protecting myself, I'm adding on more contracts and I'm betting it's going to bounce back in my favor, yada, yada, yada. And then when I'm trading well, I'm trading with trend. I'm getting my stop at break even. I'm identifying key support levels. I'm reacting properly. I'm not oversizing. I'm paying attention to changes in the options market. Like the list goes on and on and on. I think we inherently as traders all know when we're dialed in doing the right shit. And then we also know when we're pretty much tilted or revenge trading or trading with too much size. I think we all kind of know, like if you're doing exactly what you should be doing versus not. Now, that doesn't mean you're going to get lucky or unlucky. Of course, you could do the wrong things and still win. You could do the right things and still lose. But regardless of the result of the trade, which in the world of poker, it's literally referred to as resulting, basing the quality of your decisions on the outcome, which you're not in control of your outcomes. You're in control of your risk. The only thing I can possibly control right now is right here. I put my stop to break even. That's all I can possibly do. If the market gods send the market down and knock me out for break even, that sucks. But once again, it's not in my control. Then on the flip side, if I get lucky and I'm on the right side of variance and the market actually breaks out and continues, great. At a reasonable level, maybe at a recent resistance level, I'll lock in my money and I'll move on with my life. Boom. Bada bing, bada boom. Like we don't have to overcomplicate it. So as a human, do I very much want this to go up? Do I want this to break above 100 and like use this as support, the exact level that we've been talking about? Without a doubt. And if it knocks down, that sucks. But welcome to the world of trading, folks. Welcome to the world of trading. 70. Let's move this to 78 because that's 5 points. So that'll put me up $100 on the day, just giving me a little bit of a 5-point buffer if I have to keep trading on the day. So I did move myself up to $105 in profit. So no matter what, we're going to see green on the screen, which I think is a nice psychological win out of the gate. I did already lock in $550 on all my Lucid accounts. I locked those in at 100 all the way back here when we first hit it at 946. And to be completely honest with you, because of the time of the day right now, the major thing that I'm thinking about is, are we going to get hit with another 10 a.m. reversal? This doesn't happen every single day, but we've been seeing that occur quite a bit, sometime between 10 and 10:15, like 9:58 and 10:15. We've been seeing a lot of either profit taking or fading of current price action, which is another reason why I have this stop so aggressive right now, is because if there is a 10 a.m. reversal, well, I don't want to somehow go negative on the ordeal. If it knocks me out, I make $100 per account. And then if it bases somewhere maybe around 40, I could always get another position. But it's always inevitably a game of capital preservation. It really, really is. How many hours a day do you guys devote to sim trading? Hang on, this is about to knock me out. I don't know if that's necessarily, yeah, all right, knocked out. So I made a little bit of money there. Of course, this could bounce and it could rip again. That's totally possible. Like I said, I'm trying to be mindful of this 10 a.m. thing. And if it completely collapses, well, guess what? I was able to lock in green. But another point to drive home here is there's no such thing as pattern day trading in the world of trading futures. So you could trade as much as you want. You could take 10 break-even trades in a day, and if you end up getting your money on your 11th one, you are not punished at all. But anyway, how many hours a day do you guys devote to sim trading? I don't know if that's necessarily a well-defined question, because are you saying, oh, like how many hours of a day are you watching the 1 minute chart, do this, do that, do the other thing? Or are you talking about like research and looking at Bayesian probabilities and studying up on how to read proper options levels and like that type of a thing? To me, you do need a certain amount of time, quote unquote, on the felt to just watching screens. But I think too many people think just watching screens is what you have to do as a trader, when in reality, your time is better spent doing a rigorous mathematical analysis of the markets. So I count that as trading time because I'm researching the data of the market. So for that, I would say as many hours as you possibly can, because the more and the faster you learn, the better off your trading career is. But if you think you need to sit here and just watch every single minute bar develop and somehow you're going to like through fucking meiosis, like understand the secret patterns of the market, no, like you have to do it to a certain point where you just like understand how markets either move or don't move. But I would never say, like, there's a breaking point where the more hours, like after you hit X amount, there's diminishing returns on just watching the minute chart. Like your time is far better spent, once again, doing rigorous mathematical studies of the market. Son of a bitch. It knocked me out right there. But that's protection. As much as it's like the aw shucks bummer moment, there could have been a giant red bar, and then I would be deeply in the red. Instead, I locked in green. So never try. Like I know we all do it because we're all human. Try to not Monday morning quarterback. Like try not to. I know there is something very enticing about it. Monday morning quarterbacking, thinking, oh, if I bought here and sold there, and we're bottom ticking and we're top ticking. Everyone is an amazing trader in hindsight. But guess what? You don't get paid on your Monday morning quarterbacking trades. So whatever it is, just stick to your system. Just stick exactly to your trading system and you will be A-okay. Because that's really honestly the only thing you can control. You can't control what happens after. Right here, did I get knocked out? And if I held, I'd be up another 10 points? Yeah. But like, you can't kick yourself for that because in another universe and another setup, it did just keep going that way. So getting out when you were supposed to get out, as like explained and almost decreed by your trading system, you followed the rules and you did the right thing. So you can't beat yourself up for that. You can't. The SPY, this is what I was worried about. Remember when I said 67.50? I wanted a position below it because I would hope it would act as support. It's not acting as support. We broke this low at 952. So it just didn't work out this time. I got a little bit of money for it because I had a good enough entry and I managed it properly. Maybe this is a double bottom and we bounce here. And if it is, of course, I could always hop in on that particular play. There's no pattern day trading when it comes. Ooh, even the SPY is getting hit. Mag 7 starting to pop. It is 10:01. I'm trying to give it a little bit. We've been noticing some shenanigans at the 10 a.m. hour. Oil is definitely popping now. Interesting. Yeah, right here. This lower high, not so good. And then the fact that we cracked the recent low, so we went from higher highs and higher lows to lower highs and lower lows on the SPY. That's kind of what did me in on my break-even trade. So, hey, sometimes it happens. Sometimes it happens. And seeing on how this is going, I'm actually kind of happy with my management. I wanted to get the meat of the move. There just wasn't that much of a move today. I guess I could have got out at 93, but at that point, I was watching the $100 level. I saw the recapture, thought it would get going. Just didn't happen that time. So break-even trade, and in reality, I turned a break-even trade to a little bit of a profit, $150. So I'm actually really happy with how things are going. Remember, you're not in control of where price is about to go. You are in control of your risk management. I think if more retail traders truly appreciated that, I think if more quote unquote influencers, which is such a lame thing to say, like try to actually teach that of just like, folks, the only thing you're really in control of is your risk. As a trader, that's the one thing you definitively get to set day in and day out is you can say, especially if you're disciplined, this is how bad things will get at the max bad. That's what you're in control of. Other than that, you can't make price go up or down. You can't somehow magically turn it around. And I think if more people really, really internalize that, when I say it out loud, it's not like that much of a big brain statement. But I think when you internalize that as a trader is when you're going to start really making some leaps forward in your trading career. Mag 7 just got smashed, and now the SPY's getting smashed. So I was trying to trade with trend. It just so happens that trend changed at like 950. And hey, trend can do that. It's allowed to change. It's allowed to change, folks. Momentum is actually still bullish, though, on the 5, the 10, and the 30. If you're just joining in right now, please do not forget to change your contracts. Make sure you are trading on the right futures contract if you are a futures trader. Bullish, bullish, bullish. Bullish, bullish, bullish. Oh, brother. Oh, mother, oh, brother. Oh, mother, oh, brother. We almost tried to pop a little bit there. Got hit. Oh, mother, oh, brother. Where's the 50% retracement of the current range? Okay. So based on the current intraday low, which was at 931, and the intraday high at 948, the 50% retracement is right here at 40. Kind of an interesting level to pay attention to. And VWAP is actually below the intraday low, so very, very far away at the moment, so we don't even need that particular screen. Looks like we're finding a little bit of support here at the 1 minute 50 EMA. Let's see if the buyers decide to step in on this. I could definitely let you know that the we ran right into the start of positive gamma. You can kind of see this zone right here. We ran right into the start of it, and the market said, "Nah, honey, nah, honey." Are we reversing course a little bit? Maybe yes, maybe no. How do options flow? All right, I'm seeing a little bit of life here. Dude, it might be that 10 a.m. right there, 10 a.m. reversal, this time at 10:03. I haven't taken a position yet. If I do, you're going to hear it. But I just keep pointing out, this time the 10 a.m. reversal, look at flow down, down, down. This time, like it seems to be somewhere between like 9:55 and 10:15. I don't have the exact stats on it, but anecdotally, it feels like we've been seeing this type of action quite a bit. Sometime within plus or minus 10 minutes of the 10 a.m. hour, some sort of like reversal in direction. This time, we were actually diving from 9:46 to 10:03, and now we're seeing a pop, but let's see if there's actual follow through on it. If there is follow through on it, I'm happy to take a bullish trade. 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours bullish, 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours bullish. Obviously, I would love for the Mag 7 flow to improve. I would love for the NASDAQ flow to improve. The SPY was selling off, but maybe we just bottomed a little bit right there. Oil's taking a hit right now. Are we actually bouncing back around, or is this just another lower high? Obviously, no one can definitively know, but hey, that's the fun game. That's the fun game we get to play here, isn't it? All right, I'm kind of watching this down sloping trend line on the SPY ETF. And on the Qs as well. Once again, if you're joining in right now, no live position. I'm more so interested in the bull case just because right now I'm looking at 5 minute, 10 minute, 30 minute, 4 hours all bullish, 5 minute, 10 minute, 30 minute, 4 hours all bullish. Structure did pop this morning. Obviously, we're giving some back. I'm looking to see if we're actually, this is like a little fake out breakdown low on the SPY because it is a higher low on the Qs. I'm looking to see if we can possibly swing around here. Obviously, I don't know if it will happen, which is why I don't have a position yet, but that's what I'm looking for. And I think it might be, if it were to happen, it might be correlated with oil dropping. So I'm kind of paying attention to that. And I'm looking at it happening with VIX also dropping. Bitcoin's showing a little bit of life over here. Where's oil? I'm going to put oil back up. Oh, brother. My risk isn't the most right now. All right, here's a look at flow. SPY, double bottom maybe. NASDAQ, flat. Mag 7, picking up. Mag 7 picking up since 10:06. So we still might be in this realm of the 10 a.m. reversal. We were trending down and down and down in options. Granted, we haven't seen a big pop yet, but I'm holding out a little bit of hope here. Matt, what do you think about the right side of the V? Yeah, it's just literally catching off of support. Like it's just, I mean, I guess I have no issues with it. It's just a way to explain, hey, we dipped, we found support, and you're buying it off that support, and your risk is the recent swing low, and you're trying to play the new trend. Like, it's just a different way to explain a concept that is basically saying ride the bullish trend. Manipulated markets, can we call this capitalism? You know, people say that generically, and like I think a lot of people say it because it's an easy way to get other people to agree with you of like, yeah, manipulated markets. But for per conversation, I always find myself saying, how do you think it's manipulated? Like, in what way are you talking about manipulation? I mean, technically, you're manipulating the market every single time you buy or sell because you're either pushing it up or down. Like, obviously, your trade is having an impact on the market. So if we're looking at the literal definition of manipulate, as in like to alter the state of, that's manipulation. If you're talking about it in more of an illegal way, of like something with insider information, That's not really manipulation. It's still like an illegal act, and it should be persecuted. I'm not in any way trying to defend it, but that's not manipulating it. I feel like a lot of people, when they say the word manipulation, it's a lot of retail traders and it's a lot of retail day traders who are trying to say that the price action itself is manipulated, as in it was supposed to go up, but it didn't because of XYZ, or it was supposed to go down, but it didn't because of XYZ. And I don't know if that ever really exists. Like this concept of price was supposed to do something. What do you mean? But once again, this is getting really into the weeds of like, whenever I hear people say it's manipulated, I need to like have an actual like per person conversation of what do you mean by manipulation? To me, it's manipulation when the London Metal Exchange busts all trades and say, hey, that's not allowed, and this all happened in 22 because they had a large client who was going to blow out, and the market ran up, and they basically said, nope, all the trades you've done in the past day or two are actually non-existent. To me, that's manipulation, because a bunch of trades were executed, people made money, people lost money, and then they went back in history and actually said, no, that actually doesn't exist. So to me, that's a form of manipulation. Just to point out like where I see some and where I don't. So do I think it exists? Yeah. But do I think it exists in the exact same style that I always hear retail traders complaining about it? No, because I think most of the time they're complaining to complain. They're not really actually giving a specific example in which they think they're seeing manipulation. Does that make sense? The market is manipulated is losing trader cope. Yeah, I think most of the time. But once again, just because I believe that, I still believe the markets have like illegal, illicit manipulation. But I think we just have to be very specific about what we're saying and what we're meaning when we make that statement. Is there manipulation? Yes. But does that mean we can just frolic around on the internet and say manipulation, I suck at trading because of manipulation? Well, no, you suck at trading because you suck at trading. I highly doubt that the people manipulating the market, whether true or not, are individually screwing over your like one contract simulated position. It's not how it works. Manipulation equals I traded like shit today and it can't be my fault. I think most people are like that. But once again, like I'm trying to be very specific here. That doesn't mean I don't think manipulation occurs. I think there is illegal, illicit manipulation. I just think most of the time that people are bitching about it, they're bitching about their own shitty trading strategy or lack of discipline rather than like manipulation actually causing financial harm to them. A 100% exists in different scenarios. Just watch Jim Cramer's interview from 30 years ago. 99% of time, price action isn't that, though. I agree. Like I said, I do believe it exists, but I don't think it is the reason for you sucking at trading. I think you suck at trading because you suck at trading. Did you get the $1 million payout from Apex? No, I did not. I'm still waiting on their decision. I'm still confident in it. And I also understand that this type of thing just takes it takes time. KYC, AML, and they also happen to be in the middle of hunting down influencers who are lying and scamming the system. Did you guys all see that email from Apex yesterday? Basically saying, hey, like there's a lot of people who are gaming the system. They're like trying to get windfall results on the very first day of trading their funded account, and then they scalp trade from here on out. So we're cracking down on that. It seems like there's just like a lot going on with the company in the background with a bunch of new accounts, this, that, the other thing. So rolling out new accounts, dealing with people cheating the system, including some of their largest influencers, and then also the process in itself outside of all of that to approve $1 million payout takes a lot of time. So I understand why it's taking this long. So it just requires patience. I'm sure you saw that email. I read it. Yeah, I read it. So, I mean, I don't know. I like the prop trading industry. So this idea of calling out very specifically the scammers and the cheaters, I have no issue with it, because if we continually allow the scammers and the cheaters to scam and cheat, basically it's going to end the entire industry, and then no one's going to get to be able to do it. So the scammers and cheaters in the short term are going to get their payouts, but then it's going to basically be a net adverse impact on the rest of us trying to follow the system. And I want to be clear here. I have a little bit of a hot take, and I know that this is going to put me in a bit of water, a little bit of hot water with my hot take. To me, the idea of buying a bunch of accounts, that in itself, in my mind, is not indicative of you were like scamming and cheating the system. I think there are people who bought a lot of accounts who did scam and cheat the system. I think there's a lot of people who bought a few accounts who scammed and cheated the system. I think there are people who were above board with a small amount of accounts and with a large amount of accounts. To me, I see right now in the Twitter sphere, this concept of spending a lot of money on SIM-defunded accounts is somehow indicative of either nefarious action or just something that people shouldn't be able to do. I don't agree with that at all. So maybe you do, maybe you don't. But first of all, I want to let you know that I've had thousands of SIM-defunded accounts. I've shown you my account numbers. We've made videos on it. You've seen it live. I don't want anyone to think that I've somehow been hiding it from them. So I'm taking the opportunity to say it to you live, to once again, for the 19th time, drive home the point that I've had many, many of these accounts. I've been actively trading in the SIM-defunded world since 2023. So half of 2023, all of 2024, all of 2025, and a portion of 2026. So we've been at this for 2, almost 3 years in total. And I want to explain something that for all of you, I don't think anyone should spend any money at all trading at first. I think you should use paper trading. I don't even necessarily think it's appropriate to start at SIM-defunded trading. I think it's appropriate to start at paper trading, no risk, obviously no reward, but you're learning the mechanics of trading. And then when you feel confident, when you've done your research, your back test, you feel a little bit more confident about your strategies, I think then that's the appropriate time to start with a single SIM-defunded account, keeping your risk as low as you possibly can. And then obviously I wish you success. And as you grow and you're getting payouts, well, that's when you can grow it more and more and more. I've seen people bitch and complain about people who are playing with larger size, spending $10,000 to $20,000 to $30,000 a month on these eval accounts. I want to be clear. That is very possible to achieve, but you should only be at that level after you're already trading at enough size that you're getting the payouts to fund it. So to me, it should always be, I guess, a snowball that is rolling larger and larger and larger. Like, it would be absolutely fucking nuts to come out of the gate with no trading experience and be like, yeah, I spent $10,000 trading this month on these evals. Fuck it. What? That would be absolutely insane. Absolutely insane. No, you get to that point by rolling it larger and larger and larger. You traded on one account, great, you got to pay out. Maybe you went to 3 accounts, great, you got to pay out there. And then that's all of a sudden how you get to these larger spend levels. So I guess I wanted to clarify the fact that I've bought thousands and thousands of accounts, like just in my career, 2+ years, 2.5 years, almost 3 years. I've bought thousands of evals. I bought thousands of funded accounts by the time you consider all the firms together. I've had periods of success with the $1 million Apex payout that I'm waiting on now, the recent success with Lucid, the recent success with FFN, and I've had periods of failure. If you were paying attention to this period, March of last year, I ran all my Apex accounts after trading 60 days up $800,000, and I blew them all up. So I've been very public and transparent about it that yes, I've had big periods of success, but that's also come with big periods of failure. So I want to be very, very clear. I think that this industry needs a lot more transparency. I think that sunlight is the best disinfectant. So I guess I want to be an open book about it. Like, I don't want anyone to think that I'm attempting to obfuscate or hide. For example, the $1 million payout right now that I'm waiting on from Apex, I just want to be very clear about that. I did have soft breaches. The very first payout was denied for MAE. The next payout was approved. The third payout was denied because of MAE. The very first one, I'm trying to think of specifically what happened. I think that was like a close one where I was like, oh, I didn't even know I broke it. The third one, I just got tilted. To be completely honest, I didn't come close to playing out the accounts, but I was in a trade. I didn't respect my risk. I refused to close it. I knew that it was going to breach that rule, and it was just a lapse of judgment. It was just poor trading. We all have bad trading days. Obviously, I was smart enough to correct it. And hang on, speaking of trading, I might need to do something here soon. I'm paying attention to the market still. And then ever since then, I basically decided, hey, Matt, like there's a chance you could really run these accounts up. It's time to dial it in. It's time to like never have any of these violations whatsoever. And that's what I did. Every single payout from there was approved with no issue because I followed the rules every single time. Every single time. So I guess, I don't know. The email came out, a lot of people gaming the system, and the way they're gaming it. So there's two major ways to game the system, at least thus far, that people have been caught for. Number one is what one other influencer was doing was they would take half their accounts and they would go one direction on gold, and they would take their other half of their accounts and they would go one direction on silver, the opposite direction. And so basically, because they're correlated assets, half the accounts would do really well and the other half of the accounts wouldn't. Obviously, that's breaking the rules. The other way that they're recently finding people gaming the system, hang on, I'm still watching the market here as closely as I possibly can. The other way that they're finding people gaming the system, what is this level? 40. Hang on, do I want to take this trade? Is they basically YOLO it, get a water windfall on their first day, their second day, and then from there on out, they scalp trade. So they represent no consistency whatsoever. And actually, I put this in the Discord yesterday. General, hang on. Is it in trading? I'm going to show you my equity curve for my accounts. Hang on, though. We might have to put a pause on that.
Order
All right,
filled.
I'm taking a stab here. I'm taking a stab.